When we think about banks, we usually think about our own money, right? Loans, checking accounts, maybe a big vault. But there's this whole other world operating just behind the curtain, the world of the high-stakes federal bank examination. Today, we're going to pull that curtain back and see how this whole process has evolved from like a simple checkup into this incredibly deep, data-driven dive. And let's get one thing straight right from the jump. The Office of the Comptroller of the Currency, the OCC, they're not just popping in for coffee. This quote pretty much says it all. The outcome of an exam isn't just a suggestion. It can literally decide the future of a bank. It is serious business, and every single piece of data matters. All right, so here's how we're going to break it all down. First, we'll talk about what this exam actually is, the bank diagnostic. Then we'll walk through the whole examination cycle. We'll peek under the microscope at what they're looking for, then go beyond the balance sheet. And then the really cool part, the evolution from checklists to AI. And finally, we'll see how they deliver the digital verdict. Okay, first up, the bank diagnostic. Now, you might be tempted to think of this as just a routine checkup, but trust me, it is so much more than that. Think of it less like a checkup and more like a full-body MRI for a bank's financial and operational health. So, what a full diagnostic really means is that examiners are there to assess the total health of the bank. They're checking all the vital signs, capital, assets, management, all that stuff. But what they're really hunting for are those hidden conditions, the risks that you just can't see on a simple balance sheet. And this whole thing isn't just random, right? It's not like they just show up unannounced. It's a highly structured, very methodical cycle. Let's break down how this four-stage process works because every single national bank goes through it. It always kicks off with scoping. That's basically the examiners doing their homework. They're digging through old exam results, looking at the bank's current risk profile. Then comes the fieldwork. This is the main event. They're on-site, conducting interviews, and just tearing through data. After that, they issue the ratings, the official scores. And finally, you've got remediation. This is where the bank gets its report card, a to-do list of things to fix, and you can bet the OCC is going to track their progress. So, when the examiners are doing all that field work, what are they actually looking for? What exactly goes under the microscope? Well, it boils down to 5 absolutely critical areas. They are scrutinizing the entire operation. You've got the obvious stuff, like digging into the loan portfolio to make sure the bank is lending responsibly, and they're checking liquidity to see if it can handle a sudden shock. But they also dive deep into really modern risks, like IT systems and cybersecurity. And maybe most important of all, they look at governance. Is the board actually doing its job and providing real oversight? Okay, but this is where it gets really fascinating. The exam goes way beyond just checking boxes or looking at numbers on a spreadsheet. Examiners are trained to ask these 3 deeper, way more fundamental questions. Because here's the thing, a bank can have fantastic numbers on paper, but have absolutely terrible internal controls. It can look healthy from the outside, but have a really rotten risk culture on the inside. So the examiners are there to find the reality behind the numbers. It's all about the bank's controls, its culture around taking risks, and the clarity of its procedures. And this whole line of questioning really starts with one basic foundational question. Does the bank even know what its own risks are? Can they actually see the potential threats coming, whether it's a portfolio of bad loans or a new kind of cyber attack? But it's one thing to say, hey, that's a risk. It's a completely different ballgame to actually measure it. So the second question gets more specific. How big is this risk, really? What's the potential damage? Are the models they're using to measure it even reliable? And that leads us to the final, and honestly, the most important question of all. Okay, so you've identified the risks, you've measured them. Now what? What are you actually doing about them? This is the ultimate test of a bank's competence. Now, how examiners get the answers to those 3 big questions has changed. It has changed dramatically. And this really gets to the heart of our story today, the incredible technological evolution of the bank exam itself. Just look at this contrast. It's kind of wild. Back in the day, it was all paper. Examiners would physically show up with these huge binders and manually pull a random sample of loan files from a cabinet. Now, it's a world of continuous data feeds. They have advanced analytics and AI-driven soup tech, that's supervisory technology, that can spot patterns a human would almost certainly miss. And this timeline just shows it perfectly. Think about it. In the 80s, we were talking about mainframes and giant physical ledgers. Then in the 90s, spreadsheets, and those first kind of clunky databases came along and changed the game. The 2000s gave us digital dashboards, and now, here in the 2020s, it's all about AI, machine learning, and subtech. The database has truly become the beating heart of the entire examination. But you know what? For all of that incredible technology, the core principles, they really haven't changed. The tools are way more powerful, sure, but they still serve the exact same purpose. They enable human judgment, they create a permanent record through documentation, and they ensure the bank's management is held accountable. So, after all the data has been crunched and all the questions have been answered, how is that final verdict, that judgment, actually delivered? Well, it all boils down to one single crucial rating. It's called the CAMELS rating, and yeah, it's an acronym. It stands for 6 key areas. C is for capital adequacy, A for asset quality, M for management, E for earnings, L for liquidity, and S for sensitivity to market risk. The bank gets a score from 1 to 5 in each of those categories, and that combined result becomes its official and very confidential report card. And this, right here, is the ultimate takeaway from all of this. That CAMELS rating, every single finding, every correction the bank is forced to make, none of it comes from a gut feeling. It all comes from data. It's the final chapter in a story that's written in spreadsheets, in algorithms, and in server logs. In modern banking, every exam is a verdict, and behind every single one of those verdicts is a permanent, searchable database of every single decision.